If you own a business and a CP14 notice just showed up from the IRS, here's the uncomfortable truth. Other than receiving a refund letter from the IRS, this is going to be the friendliest letter the IRS will ever send you about your unpaid taxes. It only gets more expensive and more aggressive from here on out. So in the next few minutes, I'm going to show you what exactly this notice is, the clocks that it has started, the penalty math that's quietly running in the background, and moves that will help protect your six-figure balance, plus 2 moves that if you do them will make them dramatically worse. So let's start with a brief overview of what the CP14 notice is. The CP14 is the IRS's first bill. It's essentially a formal legal notice in demand for payment. It lists the tax, the penalties, and interest owed, and it asks you to pay. For a typical taxpayer, it might just be a small surprise balance, but if you're a business owner staring at a 6-figure amount, the CP14 is almost never the whole story. It's essentially the visible tip of the iceberg with something much larger underneath. Here's the first thing nobody tells you, and it's specific to your situation. A CP14 notice generally gives you 21 calendar days to pay your balance before additional penalty consequences kick in. But if the balance is $100,000 or more, the law shortens that window to only 10 business days. So the moment that your balance crosses into the 6 figures, the IRS is already treating you differently. You have less time than the person that only owes a few $1,000s, and most business owners never knew this rule existed. And while that clock runs, so does the penalty math. The failure to pay penalty is 0.5% of the unpaid tax balance per month. That sounds small until you layer it on top of a 6-figure balance, add interest compounding on top, and let it run for a year or 2 while you get to it or hope the IRS forgets about it. But here's the part that should also get your attention. Once the IRS issues a notice of intent to levy and it goes unpaid for 10 days, that failure to pay penalty doubles to 1% per month. Fortunately, there is a silver lining to that. If you get into an approved installment agreement, which is a payment plan with the IRS, it drops to 0.25%. So this just goes to show the structure of the IRS penalty system rewards you for engaging early and sorting out your unpaid taxes, but it punishes you for going silent. So what happens if you do go silent and treat this like the rest of your mail? The CP14 is essentially like the front of the conveyor belt. You ignore it and the automated system escalates on a schedule. You'll receive reminder notices and then notices that actually IRS authorized the IRS to take your money. And at a 6-figure balance, your case may get pulled out of the automated collection system and assigned to a revenue officer. So that's a field collection employee, a real person with authority to show up at your business, interview you, demand financial records, and move more aggressively on liens and levies. So the difference between dealing with a computer and dealing with a revenue officer can be night and day in terms of what you have to do, how fast the system progresses, and what kind of resolution you can come to. So here's what to actually do. Your first move is that you should verify the numbers before you pay a single cent to the IRS. At 6 figures, the balances may be wrong more often than you think. There could be misapplied payments. The IRS could have possibly filed a year for you as a substitute for return that ignores deductions you're entitled to. There could be penalties that are eligible to be waived. So I recommend pulling your account transcripts. The transcript is the source of truth and will show you what the IRS has on your situation. Many cases I see, we can often get the balance reduced if there are either mistakes or getting penalties waived, or sometimes the IRS just forgets to apply payment or something like that. The second move you should make is begin figuring out your resolution path early. Because at a balance of 6 figures plus, a quick online payment plan isn't available. If your balance is over $250,000, it will always require financial disclosure, but it may require financial disclosure if you owe under that as well. And if you're involved with a revenue officer, they will almost always want to see financial statements and financials. But you do have options. You can negotiate an installment agreement. There are partial pay installment agreements, offers in compromise, and those are some options if you truly can't afford to pay your balance in full. But which one fits you is a strategy question based on your situation, not a form you just download and fill out. And here's where strategic help can really go further in helping you get the best possible outcome. And the third move you need to make is keep current going forward. So nothing sinks a resolution case faster than falling behind on this year's taxes while negotiating or trying to solve last year. The IRS doesn't cut deals or lets you get payment relief with someone who's still digging in the hole. So they will require you to be current on filing and also currently making estimated tax payments. So those are the three moves you need to make. Here are the two mistakes that I see that you should not do. So the first mistake is draining the business to pay in full, especially if that leaves you unable to make payroll. Because if you do so, you've created a new payroll tax liability, possibly opened yourself up to a trust fund recovery penalty, which is way worse than other types of unpaid taxes. So discuss with a qualified professional. You need to keep money in your business to continue to make payroll and pay your expenses. And the IRS understands that, but you often have to work the system to make sure you can get a payment arrangement that works for you. The second mistake is just ignoring it, throwing the letter in the drawer and letting the IRS collections conveyor belt run until a revenue officer and a levy make the decision for you by taking money out of your account. So the CP14 is generally your best moment when you have IRS debt because every option is still on the table and nothing has expired. Once a later notice hits, doors may start closing one by one. And if your balance is six figures or more and tied to a business or is the result of flow-through business income, don't wait for a revenue officer to introduce themselves. Get ahead of this early to keep your options open and map out a path that works for you, lets you continue to grow your business while paying off the IRS. So I hope you like this video. If you haven't yet, please subscribe so you're notified of all my future videos, and definitely put a like or a comment if this helped you, and I'll see you in the next video.